Good morning. Welcome everyone to Animal Markets webinar. We're going to take a look at the Forex market trading, but also we can take a look at some commodities like gold and oil and some stock indices. Before we can do that though, please be aware of the following. This webinar is, and later on recording is shown to a global audience, but may not be suitable for everyone. Take a look at animalmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details and information. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Thank you for your attention on that. All right, today we're going to take a look at discretionary technical analysis and using tools to make better analysis like trend lines, fibs, moving averages, and price action, candlestick patterns, chart patterns for decisions regarding analysis and actual trading. Defining the trend is the first step, and the momentum, which direction is price heading to. Then we're looking for opportunities to either join the trend or trade against the trend using Fibonacci and patterns. Step 3 is to check if there are any filters or support or resistance levels that could be blocking a trade from developing. Step 4 is to make sure that when a trade is taken, there's good reward to risk. And of course, before that happens, actually, we want to know what the decision zone is. At what point am I interested in trading it? And what trigger do I want to see before I think the trade is ready? That's something that I'll discuss throughout this webinar. Basically, planning your trade, analyzing it, then planning the trade, and then trading the plan. Regarding the economic calendar today, we have a pound news that's marked as red. We have also some green and yellow events, of course. Another red one is the ZEW Economic Sentiment Index for Germany. And we have some dollar news as well regarding building permits and house starts, unemployment rate in Russia. So that's all coming up throughout this day. All right. Good. Let's grab our chart and take a look at what's going on right now in the markets today. I think there's some good stuff going on. I think there's some interesting things to discuss, interesting setups that could materialize right now or perhaps later today. So let's get started. We've got a lot of things to talk about. Let's maybe start first of all with the pound USD. All right, pound USD. I'm actually in a short right now as we speak. That's based upon the fact that the price is breaking a bigger channel and is in a bear flag after that bigger channel. Now, the bigger channel, of course, indicated by these purple lines right here, indicated by the green hook marks next to that's the bigger channel that broke earlier today or yesterday. Let me check when exactly that broke. Yeah, earlier today. Throughout Asian session, that broke, and basically price, I think, is going to continue with that downside momentum today, or at least, if not now, then perhaps later in the New York session. But it could be breaking as we speak. It hasn't broken yet, but it looks very bearish to me. We see good momentum prior to the break, or after the break, I should say. We see good momentum, and now we see price going flat like a bear flag sideways. So to me, that looks like a classical bear flag, and a break of that bear flag should see follow through to the downside. We also have, of course, strong momentum prior to the channel here. We have a corrective upside, and that has already been broken, as I said, with this impulse. Now, this impulse is relatively small, but still, I think it's just the start of a further downside. My invalidation level, at what point do I think this downside analysis is out of the window? Regarding the invalidation point, I think this 1 hour candle is pretty strong. It has a decent size, considering the fact that it was in Asian session. It has a close near the low. It is obviously dominating bearish candle. It's a master candle because all the candles after that are not breaking the low or the high. So I put the stop loss above that candle high. I think that for the moment seems to be the best spot. If price were to break through that level, then price is also going back into the channel, and I wouldn't expect that to happen. So I think that's a decent spot. It's also a relatively small stop loss of only about 35, 40 pips for myself. Let me check. 35 exactly. Now, in some cases I use fractals. Here there will be a fractal, here there will be a fractal. Those are key tops. So those could be a tad safer. I acknowledge that. And those are very valid places for a stop loss as well. But I decided to go with the tighter one because I thought the candle was more valuable here in this particular case than necessarily the fractal or the top. So typically, yes, I like to use tops. I like to put the stop loss a bit further away. But in this case, I think using a bit tighter one, using the candle high, not the tops, one or two tops away, is okay because of the strength that the candle is showing. It is the breakout candle as well. Plus, we've had a couple of candles going sideways. I would expect the break to happen this or next hour, because if it doesn't, then it's taking a bit long. We can see already a couple of hours going sideways. So if the break is not happening soon, there could be a bigger reversal happening, and I would want to be cautious about that. What that means is that if the break does not happen now or next hour, there's also a news event coming up. And the news event, of course, is kind of its own paradigm, its own little world. Price can be very volatile in that small window of time frame. Price could, all of a sudden move up, hit my stop loss, and revert back down. Those type of things can happen during news events like that, especially if they're red tagged or even more important, like an interest rate or a FOMC statement or a speech. Those things tend to be very volatile. So if the break does not happen this or next hour, then there are a couple of things I can think about. I can move the stop loss to just above this candle high, reduce the risk. I can exit the trade right there, right then, just like a market exit. Or I could even widen the stop loss if I have my risk management. Okay, I know this is a no-no for beginning traders and most traders. If your risk management, however, let's say you take a very small risk here. If your risk is only half of normal risk, let's say you're taking a quarter of risk and you're allowed to take a 0.5% risk on any trade, that is, I think, okay. Now, if you think that's dangerous, and would rather not do that, then you still have those first two options. Now, in this case, I'm not sure what I will do as yet. I think that it will be either trailing it or basically exiting it. But it depends on how these candles look like. This one and next one. If I see two good candles like this, another candle pushing like that, I would feel comfortable with moving the stop loss to above that high. If the candles go sideways like this, and I see two dojis, two indecision candles, then I prefer the market exit. All right, that's basically the hourly right now. A bear flag after the channel break. We talked about this more often in pattern trading. It's great to see patterns break, but it's even better to see basically after the break, see a smaller pattern that breaks. So the smaller pattern after the bigger pattern is typically a better trade than taking the first pattern break. Well, this is such an example. This is the first pattern. This is the second pattern. The second one is typically smaller, and I think it's an easier one to trade than the first one, in fact. Now, all in all, if we look at the bigger picture here, we are seeing, of course, a tremendous fall on the pound USD, but we saw also a pretty strong rally, actually, all the way up to 135 before price moved back down again. So I also see a potential 5 wave here. We see 1, 2, 3, 4, 5. Is that basically, that is a potential A or 1, and that could mean that basically this is a B or 2, and price could even move up higher for a C or 3. That's one scenario. The other scenario is that price made a bigger correction, an ABC correction that had an extended C wave, and now we're back in the downtrend. The only way to know which of those two is most likely is by seeing how price responds to this bottom, to these support levels down in 128 and 129. All right. If price breaks those levels, we're in a downtrend. If it respects those levels, we could be up for a bigger correction. Another way to look at it is how does price basically move lower? Here we saw some impulse. So how is it going to break here? If there's some hesitation with the downside, if downside is moving slower in the third part, then this is not a 1, 2, 3, but more likely an ABC. So depending on the speed, we can judge if it's an ABC or a 1, 2, 3. A 3 has to be impulsive, should be quick, should be powerful. If a 3 is not as powerful as we expected, there's a good chance it's a C. And if it is a red ABC, then a chance of a blue ABC happening also increases. So that's going to be very interesting. So if we use a fib and place it on this upside, like this, we see already price respecting the 50 fib during the fall. But that doesn't necessarily mean upside is guaranteed. That can happen even if there's a downtrend. So what levels would be typical for a bigger upside? Typical would be 78.6 fib, 61.8 fib, 88.6 fib. Those three fibs could be turning spots for that bigger upside. So those are levels we want to be, reckon with that could turn price back up for a bigger correction. If it is a downtrend, these levels could be respected, but eventually will be broken. So what could happen is we see a fall like this, price stops at the 61.8 fib, we see a small consolidation zone, continues to break. We see a ABC zigzag, continues again down. We see a bear flag, continues down. So what we'll typically see is impulse, bearish impulse, sideways or ABC zigzag corrections to the upside, but followed by downside. Most of these fibs will be respected, maybe 2 out of 3 on average, 1 out of 3 might not be on this time frame, and we'll see price stop at these fibs mostly, but then continue lower. That would be a downside scenario. Now the good thing is, it really doesn't matter which of these two scenarios unfolds. For the moment, we got a lot of space before we hit a key support level that we have to be worried about. So regardless if this is a bigger upside or a bigger downtrend, for the moment, from this hourly perspective, a downside, a bearish trade looks good. With the target aiming at 130.60 at the 61.8 fib, I think looks sweet. So let me put that target right there. We could aim lower. I could aim for the 78.6 fib. That's possible too, or even lower. But we just have to realize the lower we aim, the less likely our TP is going to be hit. So that's an equation that we have to make a decision on. Do we want to risk a bit more, go for a better target basically, get a bit more reward, but the chance of our target being hit decreases, or do we go for a safer target, one that has basically the best chances of being hit according to this analysis, which is the 61.8. There's no right or wrong here. It's just preference. So those are the good things with regard to, in some cases, wave analysis. Doesn't matter if there's a bearish or bullish scenario. In this case, whether this is a 1, 2, 3, 4, and 5 going down, or whether this is an A, B, C, or whether this is, as I already said earlier, if this is an ABC, or if this is a 1, 2, and this is the start of 3, at this moment, we have confidence on waves that downside seems the most likely, and price has a good chance of falling to the 61.8. Depending on how it falls and how it reacts, we can judge, if the bullish or bearish scenario seems more likely. But both scenarios at this moment say shorting the pound dollar looks good. Now we do have a news event, and those could always change things. And uh, you know, if we have a big bullish candle like this, rising up, pushing through the bear flag here, going back into channel, well, then obviously, it's a different story. I don't have to explain that. And in that case, if there is a big bullish candle like this, one thing is for sure, it does not look any more like a 1, 2, 3, 4, 5. That's for sure. That's one conclusion. Second conclusion is that price will probably go up to retest these tops. So we wouldn't want to short it anymore unless we see some failure up higher. Second conclusion would be that there could be a good chance of a dip and a good trade to the upside throughout this day. Don't forget, we still have some support trend lines coming up like this as well. So if we do get a bounce like that due to the news event, all right, then this could be a bounce off of that trend line. Excuse me. And price could basically make a bit of retracement and then rally up to test resistance up in here. So if we get a strong candle like that on the hourly chart after the news event, then I think there could be an intraday bullish potential up to test 134. So I'm just giving you all the scenarios here that I think are likely throughout the day, and depending on how things unfold and develop, I'm giving you already a heads up how I'm going to react basically to these reactions or to these developments, and how I will plan my approach throughout today. All right. For the moment, it looks like a bear flag, but it might not break. And if it doesn't break by the end of this hour, and if it doesn't show some good bearish candle, then it's, I think, showing indecision, and then the news event will decide. So from that perspective, if it doesn't close well enough at the end of the hour, I'm out of this trade, and I'm going to wait for the news event. The news event will tell a bit more, right? Is it a doji? Then probably downside will continue. Is it a bearish candle? Even more so, the downside will continue. If it's a bullish candle, then we'll probably see some upside, but I do think that resistance will kick in soon. And for that matter, also support is nearby. We're relatively nearby. But there's enough space for intraday trading. All right, enough on the pound. I've been talking forever now on this pound. So I hope that's clear. But if you have any questions, let me know. There are some other very interesting things going on. But before we look at that, a quick view on the euro dollar, because it is a major, and we want to know what's going on with the euro and the dollar. So we see a triangle, basically price stuck between the support and resistance forever almost, it seems, because ever since Brexit, price has not been able to escape this 110, 111.50 quicksand. Basically, it's just every time it tries to move away, it gets pulled back. So from that point of view, it looks very much like quicksand. And there's just not enough power to move away from this area. Price is just bouncing in between these lines. So at this moment, I still think an upside seems likely to go up to the minus 272 target. I think that a zigzag here seems the most likely scenario. We have a channel on the daily chart. Well, it's a start of a channel. It's not confirmed yet. We only have 2 hits on this channel. But ultimately, if price does move up to that target, that could be the 3rd hit. We're at the top of resistance zone. We got a fib target. So I think that could be a sweet turning spot for more downside. So I would love to short it at 112.50-ish area. The safest stop loss is above basically the trend line and above the minus 61.8 target at 113.40. The very safest is above actually this top at around 114.40. Both stop losses are acceptable. Even a tighter one all the way above 112.50 could work out. But, excuse me, but I would like to see a candlestick pattern first. I would like to see engulfing twins at the 112.50, then a stop loss above those engulfing twins could be fine. So you can see perhaps why I'm interested in that zone. We see resistance of the channel, we see a target, we see a clear downtrend, well, not a clear downtrend, but a potential downtrend. We do see a clear break though of the support trend line. So I think there are some good reasons to look for shorts if it gets up there. Will it get up there? I think yes. I think that this will be used as support. I think this could be a bouncing spot for price, basically to move up. and then perhaps finally break this resistance and move up to the target. We are relatively still close to support. I think this could be a bouncing spot right now. Actually, yesterday I already thought it would be a bouncing spot, and it did. All right, it still moved a bit lower before it bounced up, but eventually it did move up. And I think we're seeing the first move up here is an A. This could be a B. And I think we're going to see a wave C retest the top of this triangle. So there's a divergence here between the pound and euro. I'm expecting upside on euro. I'm expecting downside for the moment on pound. That could change though, as I already explained. And let's see if there's some confluence between the two. At the moment, the correlation between the two pairs is low. That means that the euro and pound are moving independently from each other. So there could be very well a euro dollar upside and a pound dollar downside. And the euro pound is showing that. And let's go to the euro pound in just a second. So I am expecting basically upside here. And I think a stop loss below 110.36 and long right here with a target at 111. Well, 111.25 even, or 11.50 are all options, I think. Ultimately, the top of this triangle looks very appealing at 111.50. And that seems the most likely for the moment. But it could go like this. Wait 1 second. It could go like up, down, and then show impulse, show a triangle, and then break one more time to get up to that triangle. All right, on a 5-minute chart, it looks like a correction. It looks like an ABC correction here. An A like this. A B here with an ABC within that B, basically here like this. And this could have finished and completed a C wave. It looks like a flat, ABC correction flat, and price is bouncing off this mini support level around 110.60 on this 5-minute chart. So from that point of view, I think it looks good. I will take a small risk on this upside and put a stop loss below 110.50 for sure. I'll put the stop loss below this 4-hour candle, or maybe even the bottom. Let me think for a second. I'll go below the bottom in this case because the difference is small, and I'll go below the yesterday's daily candle low. That's 110.33. Target, I'll for the moment aim for 111.46 and aim for basically the top of that triangle. I wouldn't be surprised though if later this week the triangle resistance could break and price could head up to that 112.50. We got some 2 good 5-minute candles. I know that it's only a 5-minute candle, but as I was saying in the price action webinar, that 2 candles in a row showing good strength is typical for a reversal scenario. So if we're waiting for the first kind of indication of a potential rebound, of a potential completion of this ABC flat correction that seems to be unfolding, then, from that perspective, using the 5-minute chart, I don't think there's anything wrong. And we just got the first 2 candles showing bullishness. So, yeah, I don't think it's a wrong idea necessarily. I mean, 5-minute charts, of course, are very small, but in this case, if you kind of zoom in to a 5-minute chart at occasions that you're not using it just every single moment, but you're waiting for a specific kind of scenario to use it, I still think it's good. So let's see how the euro dollar behaves as we go along in this webinar. The pound certainly seems to be struggling with the break and has not happened yet. Last hour not, this hour not as yet. So that might not happen Seems tad less likely than when I took the trade. That was about 1.5 hours ago. On let's see, where was it? Here, Doji, and I took the trade there. And we had downside, upside, downside, upside. So let's see if it finally breaks. But if not, then it is showing a bit of struggle, I think. And then probably a news event, as I said, we'll decide. All right, let's take a look at that euro pound. We just had a break of this trend line resistance, and I think that from this perspective, with a good 4-hour candle above it, the 4-hour candle has a decent size, has a close near the high, fully above that trend line. So I think that looks like a good bullish breakout at the moment, and I think that euro pound will go up based on that. We do see strong momentum here. We see this could easily be a correction. We're seeing price basically respect this support line and breaking resistance. So I think that shows the potential for euro pound to move up, which kind of supports the idea of euro dollar going up and pound dollar perhaps going down. Or euro dollar moving up a lot, pound dollar going sideways or moving up a little. We'll find out soon enough how the euro and pound do, but the euro pound looks bullish at this point. Now, I don't trade the euro pound. I'm not a big fan of trading it, but if I would, I guess I would take a long here with the stop loss, probably even below the candle low, and target. Safe target seems to be 85, I would say. Just below 85. All right, there's some other interesting things going on. I think, let me think which ones I liked. The dollar yen wasn't. We'll talk about the dollar yen in just a second, but euro yen saw a strong recovery to the upside. Price is now respecting this trend line and the support of resistance trend lines basically. So I think if we get a good breakout candle above the resistance, I think it looks good for upside. So if we get a candle like this, pushing above it, I think that could be a good trigger for upside on this euro yen 4-hour chart. Small retracement of that 4-hour candle, maybe back to the trend line, and I think that there should be continuation to the upside. Target is 120.40 minus 272 target. We can put this fib on as well. All right, we should be careful of 111, 119.25, 78.6 fib. After that, 120.40. So that I think looks like a good breakout. I mean, from a bigger perspective, we see that euro yen was in a great downtrend, but we do see good two weekly candles being strongly bullish. All right. So from this perspective, I think that price, seems good for a rally up. This is has been a strong downtrend. Let me clear this up a bit. But with a candle like this last week, I think that is a strong indication that a bigger correction or a bigger upside is coming up. Now at this bounce, let's take a look at the fibs here and put them on the monthly like this. And just like the dollar yen, price is at a fib 61.8 at the moment, whereas the dollar yen is at the 50 fib. So these could be rallies from these fibs. Dollar yen is bouncing at the 100 level, which is the 50 fib, euro yen at the 61.8. And that could be significant. All right, so if we get a good rally here, that could be very interesting. Now, it's a bit early to call that, but that is the potential there. So a bounce off the 61.8 could be huge. And this could have been an ABC correction. Now, one more thing adding to the kind of as a confirmation that this could be an ABC is the fact that the C so far has been quite, or the third point here, this third move down has been quite corrective compared to the first fall. If you look at the speed at what price fell here, it was basically 17 days, 2,200 pips. Here it fell 3,000 pips, but it took 3 times as long. And you see it at the angle as well. The angle's a lot shallower, and this is steeper. All right, now we did have an acceleration here, which that could mean that could be the wave 3 of 3, in fact. So we do have to be careful about that. If that is the case, let's take a look. This is 1, 2, 1, 2, probably 1, 2, another 1, 2. So we would have to start counting from here. And you see, in that case, if this is a wave 4, the bullishness does not add up here. In a wave 4, we would expect a correction, a triangle, a bear flag. In fact, what we see last week was a strong bullish candle, breaking through the 38.2 fib and pushing all the way up to the 50. So that is, it's possible. 50 fib is possible for wave 4, but not very likely. All right, and it's kind of another factor that makes a wave 4 less likely, especially the strong bullish candle. So I think we are seeing an ABC zigzag right here, and not a 1, 2, 3, 4. And if we put a fib from here to here, we see that also price neatly respected the 61.8 target, which is typical for an ABC zigzag. So the invalidation level of a wave 1, 2, 3, 4, 5 could be this bottom right in here, if price basically above these bottoms and this top. In that case, a 1, 2, 3, 4, 5 downside seems less likely, and this is probably not a wave, or this will not be a wave 4. Now it's probably not a wave 4. Once price basically breaks through these bottoms right in here, then that's a confirmation basically. All right, now we do have a bearish candle on the daily, so that could cause basically retracement before price moves up. That's something we want to be careful of. And therefore, we might not get the break of this trend line. Right? Price might respect that trend line or might try to break it, but it could be a false break with a wick here. In that case, there's a good chance that price will move down to test the lower fib and then move up to go up to the next fib at the 61.8. That's something that could definitely happen. So you want to keep an eye on both trend lines here. And we could put a fib from here to here. And if price breaks the support trend line, there could be a fall down to the 38, the 50, and the 61.8 fib before price bounces up and goes up to the confluence of the target and the 61.8 fib there. All right, so we'll see which one we get, bearish or bullish breakout. If we get the bullish breakout, then I would expect price to continue to the targets. If we get a bearish breakout, then I think the support fibs here will turn it around. All right, odd yen is looking like it's making a correction, just like the euro yen. It's kind of in a consolidation phase. I think it's making the ABC zigzag. So from this perspective, I think that looking for the minus 61.8 target at 78.80 could be a good turning spot right there. And I think that price could then make a turn at that fib target, break the resistance trend line, and make a breakout to the upside. All right, so I'm waiting for this ABC zigzag to be completed. All right, I put the fib basically from the first correction. Let me correct that just a tad. Right there, we see that price respected the 50 fib and the 272 target. So I would hope that it can get down to the minus 61.8. If it doesn't, and if it bounces now at this shallow target already, which is possible, sometimes it does not get down to the main target. In that case, the secondary way of getting into the trade would be the breakout. So either the deeper target, the main target, or the breakout, or the breakout. For our chart, yes, there is a head and shoulders indeed. Depending on how you look at it, it could be here, or the left shoulder could be, I guess, both of these circles. But yeah, that depends. That's very good observation, and it could correct further than I expect. If it does push through the minus 61.8 target, I would not be looking for longs anymore. You can definitely you can definitely post a link with your view. Absolutely. We'll take a look at that. Gladly. I love to take a look at other charts, so anytime. So yeah, that's something that is definitely an important factor. How does price respond to this target? If it doesn't stop there, or if it does, but it shows a bear flag, I'm out of that trade or I'm not taking it. And there could be a lot more downside to come. That's possible. It depends on the Aussie. We can analyze the Aussie a bit more in detail. What the Aussie side of things look like. The yen side of things look at this moment bullish to me, so that would make sense for IDN upside, or I should say bearish actually. Excuse me, right? Yen weakness. So I'm expecting dollar yen to move up. So from that perspective, IDN makes sense too. But we do have Aussie to look at, so we'll dive into that in just a second. With regard to the odd yen, though, we did break or push towards this top. It could be double top, perhaps. That's true too. So that's something to be aware of. We'll see how price responds to this target. If it does respect the target, I think it's a good long for upside and continuation of this previous momentum. If it doesn't respect that target, a bigger head and shoulders could be playing out indeed. All right, there was one more I wanted to show you, which is, let me think for a second. Well, let's talk about the Aussie for a second. I'm not a big fan of the Aussie at the moment, trading it, but at this point, it still looks, despite the bearish price action, it's still, I would say, from a daily perspective, still in upside territory. All right. Looking at this trend line at least. It's a bit of a mixed picture. Obviously, price is moving up. When you look at it from this perspective. So, but we see price not able to break this resistance either. So there's a, it's a hard position here for the Aussie. We see bullish candles, but hesitant ones. We see a bounce off the 61.8 fib. So the target would be this target, but will it get there is something we only know if it breaks this resistance, really. Otherwise, this could still be a bigger correction. So if it breaks these support levels, that could actually happen, right? And price could fall down to the 78.6 fib. And we could still see upside after that. And this could turn out to be a bigger, for instance, a bigger ABC zigzag. And within the B, we just had an ABC. Now that's something very, very possible. But we'll only know once this weekly candle turns bearish like it is now, or if this trend line, these two trend lines break, and then we could expect that downside to test the 70.40 level at the 78.6 fib. Now, whether it is a bearish ABC in red, or whether this is actually the ABC, and we're now in a C within blue C, and this is just a retracement for continuation of that blue C. All of that depends on how price responds to these two basically support lines. If these two support lines are respected and price bounces at it, it's a good chance we're in blue C. If it breaks it, then it's a good chance that blue B has not been completed and we're in a red ABC. Here too, price could be making an ABC zigzag, and price has just basically, the Aussie has reached the minus 61.8 target at 75. So that is key. A bear flag right now would indicate more weakness and a break of these two support trend lines. And if we get more bullish reaction to it, then more upside seems likely. A break below 74.70, and I think that downside is winning, and the bulls have lost control. Any price action that stays above 74.70, then this could easily turn out to be an ABC zigzag correction, and price might slowly make a turn here. So the odd yen analysis that I just told you is definitely partly writing, and certainly connected to what the Aussie dollar is going to do here. Will the Aussie turn around or will it break? That will definitely affect the Aussie yen, of course, too. All right, let's take a look at a screenshot here from FX Praise. All right, let's take a look. Resistance zone, agree that all yens have indeed, and those are strong levels. Head and shoulders, break of support trend line, and we're now at the next support trend line. And if we break that, there's room to the next level. Yeah, that makes sense. Let's take a look. That was made right now, I think. Let me double check that. Yes. All right. One more level I would like to add probably is just a horizontal level like this. Because of the target, I think that this could be an ABC zigzag. So if it hits 78, 75, I think personally from my experience that could still be a strong support level. But if that breaks, I agree, then there would be space down to 77. That's the space for downside indeed, the best space for downside. Yeah, I agree. I think that that makes sense. And we'll have to see which one happens. If we get to break below the 61.8 target, or do we get to bounce at these targets and perhaps later on the breakout. All right, great screenshot. And if anyone else wants to do the same, by all means, you feel free to use the chat and send that to me. Great stuff. All right, so we already discussed the odd yen, we discussed the Aussie, Euro yen, pound, and euro. Now there were some others I wanted to take a look at. Regarding the yens, you see kind of the same pattern, more or less, on all of them. Now the New Zealand yen is correcting a bit more to the downside because New Zealand is pushing lower quite substantially. But the Swiss yen, you can see just going flat basically. The CAD yen too. And when prices, going flat like this, after an impulse like that, I think there's a good chance that it will move higher. Might not be immediately. There could be, there could be a bit of a dip down to lower support before we get the rally, and we see that pattern on all the yens: odd yen, CAD yen, Swiss yen, dollar yen. Now the CADs here, Euro CAD, Pound CAD, are not the ones I thought were very interesting. The Euro CAD is really quite choppy at this moment. Going into a major consolidation phase. Has some trend lines you want to be aware of like this, but it's really slow and I don't think interesting at this point. Pound CAD is a bit better. Following the pound dollar with supportive resistance close by. So a break of either of these two trend lines could be interesting. Pound New Zealand, Euro New Zealand, pound odd and euro odd. The euro and pound crosses versus the odd New Zealand crosses, correcting substantially to the upside at this point, with a turnaround and good momentum to the upside. Now, personally, I didn't see any trade that I found very interesting. You could just, I could maybe trade this 4-hour candle right here. It's a strong candle. It's a continuation signal of the bullish momentum, and just taking a trade there with a stop loss below, simple as that, could be enough for catching a piece of this impulse to the upside. However, I'm not really a big fan of it at this point. I mean, it's possible, but I think that I don't know. It doesn't seem that attractive to me. Maybe that's just a bias of myself at this moment that trading the pound upside just seems not mentally ready for that at this point. I don't know why. I cannot explain it, but that could be a bias for myself. I mean, there is bullish price action, so from that point of view, it makes sense. We're even breaking through the minus 61.8 target a bit. We got to close above it. So, that was one of the reasons why I didn't like it earlier, because price was hitting this target. And in fact, I was thinking that could be a good turning spot for downside if it breaks this trend line. It didn't. So, that could be a signal that more upside is to come. We do still have a strong doji here that price has pushed through that high as yet already. So it could definitely be a continuation of upside and a retracement that goes further than I expect. All right. Now, Euro New Zealand made an impulse to the downside, has reached more or less the minus 272 target. It was just a tad shy of that, but that's okay. Sometimes you don't get a perfect hit. And we also broke this resistance trend line, which is a very steep trend line, indicating impulse to the downside. But that has been broken. And we see good bullish candles after that. So Euro New Zealand upside looks interesting to me. Probably better than pound New Zealand somehow. But that could also be just simply because of the euro pound as well. And on a 30-minute chart, I think we could see a good channel to the upside. Like this. All right, so we're getting close to the previous bottom. We have strong bullish candles though. But what it does mean is that maybe a bit of retracement within this downtrend channel could be good. Let's take a look at the 15-minute chart. Some indecision at this moment. So what I would like to see is just put a fib on this 15-minute swing high, swing low. It would be good to see price head towards the 38 or the 50 fib for turnaround at these fib levels and head towards the targets again up in here, minus 272 target at 158.30. So that could be good for Euro New Zealand upside, I would say. Could go higher than that. There is a supply and demand zone right in here. That could be a strong resistance spot. We see bottoms in here. We see tops, bottoms here too, sorry. And we see a sideways zone within momentum and momentum. So anywhere in that zone, price could turn. So if we're aiming for upside, minus 272 target is right at the bottom of that zone. Minus 61.8 target is more or less in the middle, and minus 100 target is a bit on the higher side. So price could go to any of these three targets, but be aware that that is a strong resistance zone that could condemn respect from the market, and anywhere between 158.30 and 160 seems like a likely spot of turning, of a bearish turn. If not, it doesn't have to be a downtrend from here, but it could just be a simple 500 pip bounce before it moves up higher again. Whether price will be in a downtrend or not will depend on how it reacts here. If there's an ABC zigzag, there's a good chance price will move up higher. If we see the first signals of more of an impulse of 1, 2, 3, 4 like this, more downside seems likely. All right, but in any case, a bearish bounce from this zone seems pretty likely, I would say, even if this is a wave B and this is an A. So all in all, just to summarize, pull back down could be good for upside, and then looking for resistance for a downside seem like the best trade ideas for the moment for this year in New Zealand. All right. Let's see. We'll take a look at the Euro Swiss C in just a second. I don't personally look at it, but curious what you have to show. FX praise, we'll take a look at that in just a second. I'll just finish the pound odd and the euro odd. You see the same with the euro odd, in fact, breaking this channel as well, breaking multiple trend lines, in fact. And I remember talking last week about the potential for a zigzag on the pound odd, which was, I think, here, if I remember correctly. This was the first impulse. I'm looking for a next impulse. We got it partially, not that much as yet, but this could be correcting higher as well. I don't like to trade it. I would probably rather wait for the break of this support level for a continuation of the downside. This is looking corrective, this upside. So all in all, I would rather wait for a break of support and trade it down than trade it to the upside. So waiting for the break of that. The euro odd break, however, is different. It has a lot of impulse. This is a small kind of bull flag. You can see it better on the 50-minute chart. After a good impulse. So that would have been a good trade too on the Eurod. It kind of is behind us now at this point, but that would have been a good trade. Maybe some of you managed to catch the break of that bull flag after the impulse and after a bigger break here and here and then here. So, any dip, if we get a 4-hour candle like this, retracement that 4-hour candle, stop loss perhaps even below the previous candle, and continuation of that impulse seems likely too. All right, the Kiwi is at a potential bouncing spot, but there's a lot of bearish momentum. There's a doji. At this moment, the breakout to the downside seems more likely than a bounce, I would say. But we got a round psychological 70 level as well to deal with. So from this perspective, I don't think trading it now makes sense. But we are at an interesting bounce or break spot, trend line and 70 level. So depending, what it does, break or bounce, it could be good to trade the bounce to the upside or the break to the downside. Let's see how price responds to this trend line. Last but not least, the dollar yen and pound yen, and then we'll take a look at the euro Swissy. The pound yen in a triangle here and a break of that support, I think could see a follow through lower. That looks pretty good for downside, I would say. So a breakout would have to basically see price push through 139.50, 139.25, anywhere between 139 and 139.50. The dollar yen looks bullish. It actually broke through this little triangle, but hasn't broken the top as yet. So that move to the upside, I would say, is not ready to trade right now. We got a resistance level right here. We're right in front of it. So I would have preferred price to make a bit of a dip before trading it to the upside. It is not making that dip as yet, and it might not make it. But if it doesn't do it, then I'm not going to trade it right here. It's too close to resistance at this point. All right, let's take a look at the Euro Swissy right now. Euro Swissy 4-hour chart, and we see price breaking support trend line. Kind of like the pound dollar in a certain way. We got a break of a bigger trend line, and we got a new trend line coming up here, as you can see. Let's take a look at that. I didn't look at the Euro Swissy myself this morning, but yeah, that definitely looks like a good trendline break and a bit of a hook back for more downside. 4-hour candle engulfing twin like that could be a pretty interesting signal for that. I don't trade the Euro Swissy myself, but I can see why FX praise that caught your attention indeed. That looks interesting. Yeah, looks good. So it looks like we're getting some Swiss franc strength. or euro weakness. I'm not sure. You're actually still hanging in about the same spot, back down at the support levels. So let's see if it bounces or not. Well, if it breaks these bottoms, I might not want to get out. I'm not sure. Let me double check this. For the moment, it looks like a flat. If it breaks these support levels right here, then there's a chance that price could move lower to retest these bottoms right here. Ah, the pound is breaking. All right. So let's see how this hourly candle holds. If this hourly candle closes near the low, then I would probably just move the stop loss to above these tops. If there is a significant wick here, I would maybe just move it to break even. So let's see how the breakout is happening. That's a fact, but let's see how the breakout manages. Will it be able to hold the candle? Will it be able to close bearish? And will the bears be able to keep control of this candle? Or will the news event scare them off and will it turn into a doji? That's something, that's the next question. The breakout is happening, but we're not sure how the break will happen. And we want to see a good break. We want to see a candle close near the low, and that would significantly increase our chances of a good trade developing. If not, then we want to take, I think, defensive measures against the indecision. If we get a good breakout, then I would still move the trail stop, but just above these tops and leave some risk on. If we get indecision signal, then I would move to take all risk off. In that case, I don't want to, keep anything on the table that is risky. In that case, I would just move to break even or +1, +2, plus a couple of pips, and if the trade gets taken out, then no problem. At least there's a couple of pips profit, and we'll try to re-enter after the news event. But it's good that it's breaking. Obviously, that's always a plus. Now let's see if price holds. At this moment, price has moved already 50 pips away from my entry at the very max, at the very low at this moment. So if it holds, that would be a good trade. Let's see the potential profit here where I have my TP is 150 and the risk is 35. That would mean about a 4-to-1 trade. So let's see if that indeed happens. That would be great. If not, then well, let's hope the risk is reduced. That would be good. And the euro dollar obviously is doing not so well at this moment. It's falling as well, but it's falling less than the pound, and that has to do with the euro pound, which is probably moving up indeed, as we see, and it's following through on that upside we were talking about. So yeah, the euro dollar looks a bit worse now at this point, obviously, but because it's moving lower and the euro pound is moving higher, it could still respect this bottom here, make a bit of a head and shoulders like this, and then still make that bounce to the upside. That's something that easily could happen. If it doesn't, then unfortunately this trade will be a loss, but then hopefully the pound will be a win. If this is a -1 loss and the pound turns to be a +4, then both trades, still equal to a +3 gain. So that's good. All right, so at that point it looked good because it was an ABC correction like that, support trend line, and yeah, it seemed like an upside continuation was probable, but I think the dollar is kind of pulling both, specifically the pound, but also the euro a bit. So we'll have to see how price responds to these support levels. Just a tad lower, I would say, probably around 110.50, a few pips lower, 110.45. So we'll find out soon enough. All right. Yeah, thank you, FX Praise. It was a nice little bear flag. So I do appreciate smaller patterns after big pattern breaks. This is a great example of that. Otherwise, I think that's all from my side. I don't see anything else that caught my attention at this point. Maybe you do. Let me know. FX Praise did a great job as well with showing his or her view on the, let's see, odd yen and Euro Swissy. Euro Swissy actually looking in certain ways similar as the pound dollar break of a break. But just to give a recap, all in all, I think pound downside, euro upside, but question mark, is it going to bounce or not? If it doesn't, there could be a break to the downside, obviously. If it breaks through this bottom at 110.30 and the 110 psychological level, then we're probably seeing a break of this green support trend line, and there could be more downside to come in the upcoming days. So that's a very important area for price right now, 110.50, 110. If it doesn't bounce, then there could be a breakout, a larger breakout to the downside. Other pairs that caught my eye were a pound yen downside throughout today, a euro yen upside, but if it does break to the downside, I will be keeping an eye on these fibs to see if it could make a rally from those levels. Odd yen bounce or break could be interesting today. Same for the odd yen. Euro New Zealand retracement from our upside, slamming into major resistance. Yeah, that was basically the quick recap. If you're interested in more webinars, please check out education webinars. Go to admiralmarkets.com first of all, of course, then education webinars, and here you can register for all kind of webinars. Tomorrow, for instance, strategy webinar, same time, same place. Wednesday evening, Nana takes a look at naked scalping part 1. That's at 4 p.m. GMT time. Thursday, 4 p.m., we take a look at intermarket correlations and why they're important. If you're looking for a broker, check out Admiral Markets. It has great reviews, has great IT developments like MT4 Supreme Edition and MT4 Web Trader. Nennet and I try to make the analysis as good as we can as well with technical and wave analysis. And there are other things you can find out here in these tabs, articles. You have market heat map. You have information about the platforms, which products you can trade, not only Forex, but you can take a look at oil and DAX. We can do that right now, in fact. Trading calculator. So there's a lot of things to discover here. FX Praise has one more screenshot. Great job on that. Let's see. It's the Euro Yen 4-hour chart. And looking for more downside because of the divergence. Yeah, that interesting analysis regarding divergence on the RSI. Let's take a look at my oscillator, actually. I was using blank charts today. Let's see how the awesome oscillator looks like. It too is in a retracement mode at this moment, hasn't reached the zero line yet. Let's see. Well, there's certainly things to say for it. We got bearish momentum here. So if it breaks the support trend line, I definitely agree that you got divergence on the hourly chart too between these tops. And in that case, there's a good chance of a downside to the 144 EMA. So probably the 38.2 fib if it breaks that support trend line. Yep, interesting. Let's see how that shapes out. But back to the FX Praise screenshot here, I can see the reasoning here for basically a turnaround or a break to retest the bottom here, and that could definitely happen when you look at other yens as well. So that makes sense. If we look at the dollar yen, for instance, I'm not trading it to the upside because I also want a bigger pullback before trading it to the upside. All right, but the euro yen, we'll have to see how the euro dollar responds later on today as well. If it breaks 110, 110.50, more downside seems even more likely. If it respects that, it could stay in this triangle. If the pound dollar is breaking substantially to the downside, the pound yen, for instance, break could be a bit better than the euro yen break. Because if the euro pound is moving up, right, and well, we have a bit of a doji now, but if there's a good, bullish candles seen on the euro pound, then the pound yen break to the downside could be a bit better than the euro yen. Regarding indices, oh yeah, that was one of the things I wanted to show you was the break of the potential break of the DAX channel, which is happening right now. It's following the euro dollar and pound dollar to the downside. We basically saw a deep fib right here, 78.6 fib. Price hitting the target, minus 61.8 target, showing most likely divergence. I don't have an oscillator, but I would expect divergence between these tops. Shallow channel, and we're breaking that channel as we speak. That's the break I actually wanted to show you beforehand, but just a bit too late. I forgot about that. So it's breaking as we speak. And if you're not in the trade, then I think we could still see retracement, a bit of retracement at least of this candle for more downside. Now, what does that break mean in a bigger context? In a bigger context, we see basically a lot of choppiness. So I think that price will just probably retest support again down around 9,600. We could put a fib from here to here. And, a challenge of the 50 fib at 97.31 seems reasonable as a target expectation. That could be a bouncing spot again, and price could just build a triangle, basically. We actually, on a weekly chart, already see a triangle happening right now. Like this. Roughly, that's one way of drawing it. So a break of this triangle is needed before we have a long-term directional guideline here. For the moment, price could easily stay between these two trend lines. Oil is making some downside as we speak, slowly but surely, but choppy though. This could be wave 1 or an A, this could be wave 2 or a B. This, at the moment, considering this downside, it looks more like an ABC to me, but when we put a fib on the upside, we can see levels that might be important for a turn at 42.72, at 40, the 38 and 50 fib, and it looks like price has space to fall because it's respected the 23.6 fib. So now that it's breaking through the 23.6 fib, it looks like there's space down to the 38.2 fib. And it's making kind of a mini bear flag, just like the pound actually, or triangle. So a break of that triangle could see a fall down to the 38.2 fib. Gold actually respected the 38.2 fib, right? Then went up to the minus 272 target. But I don't think that's it. I do think it's going to go up to the minus 61.8 target. We're just seeing a bit of a bounce at the initial first target, and I think we'll see a follow through of that of this zigzag or whatever it is, this bullish momentum. So one thing I think we can look at is how far can the retracement go before we get the turn, and let's take a look if we see some confluence. We see correction already here. $50 fib looks good if it gets there around 1300, 1305. That could be an interesting turning spot. Let's put a fib on the correction as well. And we see a minus 61.8 target pretty close by as well, depending on how we fib it. 1305, that looks like a sweet spot there. Oh, let me put a channel. It's not the best channel, but yeah, I think it shows you roughly how price is moving down. It's not the best. And now there's a bit of a triangle here. So if this triangle breaks to the downside, I think we could see a fall down to 1305, which would be a bouncing spot due to the fib levels, previous support, and the bottom of this channel. And price might rally up there to the next target, the minus 61.8 target. Now, if price breaks through the resistance of this triangle, it would be breaking roughly through the channel as well, and that means that price might not get to this level, and there could be a breakout sooner. The main target, though, would be the minus 61.8 at 1465. And if that happens, we would see something like this. Down, bounce, and a climb towards that target. Last but not least, no, I think that's it, actually. Yeah, those are the three I wanted to show you. So thank you for joining us today. Wish you all great trading. Thank you so much, FX Praise, for your chats and your screenshots. And really appreciate that. I hope that more of you would do that. I like the interaction. And hope to see you tomorrow in our strategy webinar. Let me see if I can find that. Right here. animalmarkets.com/education/webinars. Wish you all great trading. Talk to you soon. Cheers.